I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're speaking with Rick Ackerman. He's the editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Superior, Colorado. Welcome back to the show, Rick.
Thanks for inviting me on, Jim.
Everybody's keeping their eye on Great Britain right now with the vote on whether to stay in the European community will be positive or negative. U.S. Fed head Janet Yellen has just made the brilliant statement, if Britain decides to exit the European community, it could lead to market volatility for a while. How accurate is that statement, and did she really have to make it?
Well, you got to remember that we're having our expectations managed by Yellen. That's really the job of the Fed. And some of these things she says are so outrageously stupid, you wonder who's thinking she's presumed to be managing.
And how good of a job is she doing of that?
Well, I think Wall Street's certainly convinced, only because they want to be. But the rest of us, when you see the economy down at the level of Main Street, there hasn't been much trickle down there. So it's pretty obvious to the man on the street that the Fed's monetization has more or less failed. It's failed even worse in Europe, but we never seem to learn.
What is the alternative to central banks?
Well, it's a pretty simple alternative, and that's no central bank. If you read the Creature of Jekyll Island, you know that the Fed was essentially created to give the bankers free rein to create the coin of the realm at will, and they've certainly done a heck of a job there. We've got a lot more money in circulation now, and when you think that back when I was a kid, there'd be a candy store, they'd be selling lifesavers for a nickel, and there must have been enough profit in lifesavers and things like that that the people who were selling them could put their kids through college without hawking their homes. But we've gone in so deep in debt now just to kind of make up what the Fed has inflated away, and I'm somewhat seduced by all the electronic gadgets that we have that make life easier, to think that that's somehow a rise in the standard of living. But the things that really count, that make a high standard of living, such as women having the option of staying home to raise their kids, and parents having the option of putting their kids through school without getting in debt up to the ears. So we've kind of lost those things, but we've certainly got some electronic gadgetry.
Well, you can't save for your future anymore with such low interest rates.
Well, and that, 10, 15 years ago, the popular wisdom was that the baby boomers were going to inherit the greatest generation's wealth, and it would all go in the stock market. But what's happened is that the greatest generation's wealth is being eaten up by assisted care at the rate of about $60,000 a year. So there's really not much of an inheritance, and the baby boomers they're in a difficult spot. I'm one myself, and I'm thinking every month when my Social Security check comes, oh, please let it just continue for a few more months before someone discovers the system is tapioca.
Mm-hmm. Well, in Canada, the finance ministers met in Vancouver yesterday and decided, yes, maybe perhaps we should improve the pension plan because payments into the Canadian pension plan haven't increased in the last 20 years. How sustainable is that?
Right, and the actuaries are still kind of working the numbers in a way that suggests that they expect 8% returns over the next 20 years, and that's a big problem. But when you play forward all public and private pensions, none of them are going to meet their obligations. They're going to be well short of their goal.
And in Europe, where they have negative interest rates, same thing in Japan, pension funds, banks, and insurance companies are taking a pounding because they have no way to make money except to charge you more for things.
Right, and it's all, I think with respect to the healthcare system, we're probably within 5 years of very serious triage because, you know, it's one thing to monetize all the financial assets to pump the stock market and the bond markets, but it's an entirely different problem to pump up the pension and healthcare systems. You know, those are real expenses that have to be met every month. And what it reduces down to in the U.S. would be a generation of millennials and Gen Xers who are living at home till they're in their 30s and cannot find jobs that are commensurate with the training they've had. And they're supposed to be footing all of the bills for the retirement and health care of the baby boomers. So there's a little bit of a problem there. And, of course, we talk about the Social Security Trust Fund being solvent till the year 2035, but the problem is there is no trust fund.
Well, one of the problems with pension plans in the U.S., Canada, and Britain was that it started one day, but nobody had been paying into it. So it started out of a deep ditch, and in reality probably has never gotten out.
Well, it's a great deal for my parents' generation. They would be in their mid-70s to 90s, and I think they deserved it. You know, they went through a depression, they went through a war, they worked hard, and I think they deserved to get out of the Social Security system more than they had paid into it. But things are kind of equalizing so that we're getting now about what we paid into it, but looking ahead even just 10 years, kids that are voting or keen on Bernie Sanders seem to think that the government will pay for them as well, but deep down I think they understand that there's not going to be a Social Security system or Medicare when they're ready to collect.
In Canada, though, Medicare has been a provincial responsibility, but the provinces are saying, too, even in places like British Columbia where you pay a premium for your medical services, that we're reaching the point where over half of government spending will be for health care. And if they don't do something to improve our health or increase the funding, just about all of their money will go to health care. There won't be anything left for education or building roads or sewer systems.
Well, that seems to be the case already. You know, if you see that there's been, let's say there's an education bond in California to raise $800 million or some such, or the Postal Service has raised the cost of a first-class stamp from whatever to whatever. You know, if you see the price of first-class mailing go to 70 cents, you know that it's not going to enhance the services. Every penny of it will go to meet the retirement benefits obligations for retired employees.
In Canada, it's $1 for a stamp. And they canceled home delivery last year, but then the new government says it's going to return it. After they canceled home delivery, the post office actually made a profit, but they're counting on home deliveries, I think, from the companies like Amazon, online orders to keep them afloat. But after a while, how long can that be sustained?
Well, we've talked about privatizing the Postal Service in the U.S. for 2 or 3 decades, and it almost seems to be happening in a de facto way by way of Amazon. I saw the other day that there was a U.S. Postal Service truck making a delivery in my cul-de-sac on a Sunday. And I guess when you're a big player like Amazon, you can get the USPS to do whatever you need it to do. And Amazon, to a significant extent, is forcing the Postal Service to become efficient and make deliveries in ways that make money.
Getting back to Yellen's statement, Brexit could lead to market volatility. What's your view on the vote that's going to take place on Thursday?
Well, I went over the top last week with something that said the whole Brexit thing was just worth a yawn, and it won't change Britain's relationship to the euro, to the currency system, simply because they never joined the euro, and it's understandable why there would be opposition to remaining in the EU in Britain, because they're having certain immigration policies forced on them that threaten the economic underpinnings of Great Britain. But I don't see Brexit as being a big deal. The ones who are making it out to be momentous are really the bureaucrats in Belgium and their lackeys in the news media, which have a way of that they understand no more than what they read in press releases from Brussels.
One of the things that a lot of people don't realize is that the officials in the European Union are not elected, they're appointed. And if they screw up, you can't vote them out of office and replace them. They're in there for as long as they want to be.
And that it's dawned on many Americans that regardless who they vote for every 4 years in the presidential election, that it is those same bureaucrats who are going to be running the show, who have been running the show for forever, and who, under a president such as Obama, who has essentially ignored Congress, that the bureaucrats are stronger than ever.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, oil has been staying around the $48 to $50 mark now for a couple of weeks. Is it going to stay around there, go up, go down?
Well, I've been thinking low to mid-50s would be about as high as crude was going to get, and we've been there. We had a high on the NYMEX futures contract of, I think it was $53.67, and it's been mostly downhill since then. I see crude in a trading range between current prices and somewhere down around 30. The low of this last big move down having been $27, but I think most of the rally since then was a dead cat bounce, and it was driven in a very unusual way by scare stories from the supply side. This idea that Nigerian output of crude was going to slow down, or there would be some catastrophic disruption in Venezuelan supplies. So those are really scare stories, things that haven't happened. But ordinarily, we like to see crude in a bull market driven by a demand story, which is usually has to do with China's economy going great guns, and we know that's not the case.
Well, you had 1 million barrels a day taken out of production by the Fort McMurray forest fire. That lasted for about a month. Some service stations in the interior of British Columbia did run out of gasoline, but that only lasted a few days, and it seems the supply chain now is back in force. People have gone back to Fort McMurray. The factories there are now pumping out oil again. You're absolutely right. Trying to rely on disruptions is not very productive, is it?
No, and then I guess there's a note of desperation, really, in all the news stories you read about crude $50, and everybody's we're supposedly looking forward to $60, so we can all be paying a lot more at the pump. Here in the U.S., it's certainly cheaper than it is in most other parts of the world, but the high test has gone from about $2 a gallon to a current, I think, around $2.60. But we're supposed to be happy for the bankers if crude prices go up to $60 a barrel and we're somehow paying that additional tax, we'll be paying $3.50 at the pump. So get ready to celebrate, Jim.
I'm taking a look at metals prices. Copper was up today. Gold down over $12. Silver was down slightly. Is gold kind of a seasonal product where in the summertime it usually does go down in price and then picks up in the colder months?
Well, if that's the case, then gold is showing pretty good resilience here. I like the rally so far in 2016, and even though gold had a surge based on Brexit news of about, I think it was a $43 day. By the next day, it had given back $40 of that gain. But the interesting thing from a technical standpoint is that the high of that move slightly exceeded a key peak that I was looking at from January of 2015. That basis the COMEX futures was around 1308. So gold's move went a little bit above that, and it means that the sell-off that we've had since then is corrective. In other words, it looks like a buying opportunity, and at least again from a technical standpoint, this weakness doesn't really look threatening till it comes down to below 1200.
The Canadian Venture Exchange, on days when the other equity markets are going down, it's been going up. Today, down slightly, but is that a reflection that the gold miners are becoming very popular?
Well, certainly the Canadian exchanges get there are better times really when all the mining stocks that are listed on those exchanges are doing well. I guess also the rise in the Canadian exchanges is a good indicator of speculative activity even outside of the energy sector. So I guess it's a little bit of speculative fraud there. And my forecast, my long-term forecast, I'd feel like a 10,000 point drop in the Dow would be right as rain. But again, from a technical standpoint, I could see significantly higher prices in the S&P 500. So I'm not sure the market has had its last hurrah, even though from a fundamental standpoint, I could give you a dozen good reasons why the market would look much healthier at half the current price.
Transports. CP Rail reports that its shipments have declined 36% over the past year. Is that a forecast of things to come?
It's certainly, I think it leads further problems in that industry. And, you know, you have some big numbers, big problems related to the shipping industry as well. A lot of ports, especially on the eastern seaboard of the U.S., have taken on huge expansion projects simply to make room for these giant vessels that you can put as many as 15, 18, even 20,000 boxes on. So they're ready for lots more business, but you know, the industry itself is in such a funk that you may have there's going to be further weakness in that sector and all the indexes that represent it.
I know in Panama they've spent a tremendous amount of money to expand the canal there. Is that going to be wasted money?
Ultimately, probably not, you know, if global shipping recovers. But Panama didn't really have much choice. They've got locks that go back into the early 1900s, and you know, it's certainly a huge savings for shipping trans-Asia to the Americas, and I think it'll be a very useful, well, it's as useful as it's always been, but more so because it can handle some of these tanker giants. But some of the locks, I'm not sure how many new locks they built, but I saw them located on a map and drawn more or less to scale, and they're hugely larger than the existing locks. And Well, I just think it's a good thing, but it's going to take a lot of years to amortize the huge expense that went into it.
Rick, is there anything else that we should know about today?
Well, I always like to put in a plug for long-term bonds, which means mainly zero coupon U.S. bonds, long-term muni strips, meaning maturities out to 30 or 40 years, because I still believe that lower interest rates are long-term are a no-brainer. The recent lows have been down around 2.4% on the U.S. 30-year, but I think that the rates are going to go below 1% on the 10-year and as low as 1.64% on the 30-year. And these investment instruments are so leveraged to small changes in long-term rates that occur now that there's a very solid capital gains potential in owning paper that's well out on the yield curve. So, and I think the whole world's on the wrong side of the trade because they've seen rates come down from 15% to the low twos, and they're saying correctly, well, you know, how much lower can they go? But just that last one-third differential, 2.4 down to 1.6, it's a very appealing investment to me.
Rick, thank you so much for chatting with us.
Well, thanks for inviting me on, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He was speaking to us from Superior, Colorado. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. If you have any questions for Rick or any of our other guests, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.